What's up, guys?
Welcome
to...
Wait, did you click record on the video?
Yes.
The video is recording. Welcome to episode 8.
8.
Long-term investing.
Long-term investing. First, short-term investing.
Oh, investing in general then.
Yeah, but like going more in depth on whether you should go into long-term investing, short-term investing, what's the pros and cons for each.
Yeah.
And our opinion on all that. So we're going to get into it. But first, you guys are here.
It's Monday.
It's Monday, and it's the 8th week.
Can you believe it? That is 2 months.
2 months. And
Oh
if you've
my
been
gosh.
watching since the beginning, we thank you. We very much appreciate it.
Mm-hmm.
We hope you guys have been learning and
Growing.
enjoying.
2 months is a long time. That's a lot of time to become better.
It is. And you've probably already seen growth already. And if you haven't, it's okay. Just keep going. Keep working. Keep pushing towards the better future self. And today, we're gonna get into long-term investing, like we said. But first,
But wait. We have a fee.
there's a fee.
All right? This is not a monetary fee, okay?
No.
This is a fee. This is an information exchange. All right? See, this account, we grow by word of mouth. We're not going to be running any ads on this podcast. We're not going to be bombarding you with stupid content. We try to entertain you, all right? If you got anything from this podcast, if you laughed a little, smiled a little bit more, if you had a new perspective, if you changed anything, if you grew just the tiniest percent, 0.1% in the right direction, and we helped you with that, go tell someone. We
Go tell someone.
We go by word of mouth.
Word
bro.
of mouth.
So go tell someone about the show. Anyways, let's get started.
But first,
But first.
I want to ask you all a question.
Oh, what is the question?
What is your favorite
Oh
water?
my God, bro.
Just quick. Leave down in the comments below what's your favorite water. Low-key, I'm trying to figure this out.
It's a huge debate
This
going
is
on.
bad. Arrowhead is tap water. I have to drink it because the only thing they have here.
I unironically like Dasani. I know there's going to be
Dasani's not bad.
there's going to be a lot of people that attack us for that, but Dasani's good.
So wait, let's quickly say our favorite. My favorite's Kirkland.
Okay.
Kirkland water. Yours?
I'm just going to go with I'm going to go with Dasani. I'm
That's
putting Dasani at the
bold.
top.
That is bold. I don't think I've ever heard anyone
I'm
say that.
anti-world, bro. Everyone's against me.
Interesting. Okay, well, let us know in the comments, please, and
Yeah.
we'll see what the top water really is. So
Top water or tap water?
no, top water,
Top water.
the top
Okay.
best water.
All right. Anyways.
But now that we've heard your best favorite water,
Yeah. Or you're just thinking about it and you never wrote the comment because you're just continuing
Thinking.
to think about it.
let's talk about how to make you super rich and have a lot of money in investing.
Yeah.
So
Let's go.
first question: what is long-term investing?
All right. Anyways, long-term investing, that's a pretty simple answer, right? Like, just look at the name, long-term, right? What I want you to think about is long-term investing is almost like the entire other side of investing compared to short-term and long-term. Long-term is making the decisions that benefit future you instead of present you. So that's how I view long-term investing, is that delaying that instant gratification.
So yeah, and then I think a lot of people might be wondering, when I first got into investing, I saw long-term investing, like a lot of older guys talked about it as like, oh, you need to think for the future, stuff like that. Short-term investing is really risky, and generally speaking, if we're talking long-term investing, it's a lot less risky compared to short-term investing in terms of like losing the money that you put in.
Yeah.
So that's like the main thing with long-term investing is it's putting your money into an asset and just waiting like 5, 10, 15, even, 30 years, holding just, different stocks or exchange
The
funds.
Costco guy just dropped something off at the door. My
Oh, he
mom's
did?
calling me. Should we do this live on the podcast?
Yeah, just go grab it.
No.
Oh, your mom's phone call.
Denied. Thinking Wealthy podcast.
Okay. Do you want to grab the package or not?
No, let's keep going.
Okay.
I'll grab
So
it later.
long-term investing, the main point of like why you would get into long-term investing, why you would do it, is more for building wealth over time, looking towards the future and building your wealth for later. But at the same time, we want to try to enjoy our wealth in the primes of our lives, right?
Yeah.
A lot of arguments against long-term investing is that it takes away from the money that you could be having now. If you
Mhm.
use that money smartly and made a bunch of money off of your initial investment, technically you have a lot longer to live with that rich life. But overall, there's a balance that I think me and you both kind of look for in terms of like
Dude,
keeping it safe.
when I first got into investing, I'm going to hold the mic because I never do this. But when I first got into investing, I was really like kind of against long term because I thought like a bunch of old guys were like, yeah, get your money and then you can get it later in life. And I felt like that was like a way of them telling like to cut off some competition, you know? So that's why I was like really
Right.
against long term in the beginning. But I think that could be a lot of people right now. Like a dude just watching the guy on his couch with his earbuds in is like, dude, long term investing is so stupid. He could be in the exact same boat I was, and he's just like completely against it and thinking that he'll never be rich. But long term investing is very useful. But there's a balance, you know.
Yeah,
There's
I
a good
agree.
balance you can reach. So don't discredit either side of investing. I just want to throw that out there.
Yeah, so I guess first let's do what is short-term investing, that question, and then we'll kind of go back into like pros and cons, talking more about it. But short-term investing obviously is just kind of the other side of the coin. But the main things with short-term investing is a lot higher risk, usually working with companies that aren't as established, and the movement of the stock's value is a lot more unpredictable and harder to kind of, I guess predict, right?
Unpredictable.
It's unpredictable, which, there's a lot of strategies that people use, mainly with like options trading, day trading, crypto trading, all of these things that are a little bit more risky but yield higher reward, right? And it's a lot more looked at. Like on TikTok, there's like a whole scene of like, I used to kind of be in this. It was like a whole scene of like day traders and options traders and these people that basically just call out like random stocks and companies that I don't think anyone's ever heard of. And they're like, it's going to go up. And sometimes it does. Sometimes it doesn't. And it's mainly all just technical analysis, looking at the graphs, looking at kind of, how people are predicting the movement is going to happen, as well as looking at like important dates for stocks, stuff like that. But we're not going to get into like how to predict stocks because, I mean, me and Nick are both not very qualified in that.
Absolutely
But
not.
kind of the whole point is there's a lot more risk involved when it comes to trying to predict short-term movements. Like long-term, over time, we're always going to see kind of a trend of going upwards. As long as, companies are growing and our country's GDP is growing, we're going to continue to see in 5 years from now, we should be at a higher place than we were before. And because of that, long-term investing becomes a lot more of a safe option. Do you have anything else to kind of add on there?
Yeah, short-term investing, it's just it looks really nice. Like the whole idea of it, it's very enticing. It's tempting because you
Yeah.
want to get those quick gains, and that's why so many people get roped into it because they're like, I could have $3 million by 2 months from now. Like that's how people often think, and they really want to look at the positive side of it, but like letting those emotions in and then letting them like control you when it comes to investing, that is no bueno. Like that's gonna mess you up.
Yeah.
That's just my take on that.
So the main thing, I guess, the question I think is going to be the prime of this video is a question actually for yourself, the viewer, which is, what do you want your investing to be for? When everyone, I think, kind of starts with investing, like I almost see this every time I see like a new friend get into it or someone who gets excited about it. They're all over it. They're all excited about it. And the main thing that they're doing is looking day to day to day, right? Looking at like, what moved today? What could I have made today? What money can I make today? Right? Like constantly looking at day over day over day. And a lot of the time, what happens in the beginning is you want to make money, right? You want to make it like your job, theoretically, right? And what ends up happening a lot of the time is you start to realize, oh, this is a lot harder than it seems, and it's a lot more kind of just like up in the air, unpredictable than it seems. So if you're sitting there wanting to get into investing, I encourage you to not just put, all your energy and money towards short-term investments, and start looking at some ways you can always incorporate short-term investing into a strategy. But at the same time, if you're only short-term investing, in a year from now, it's going to be hard for you to have more money than you started with, because a lot of the time day traders end up losing more money than they actually gain. But once again, I'm not going to discourage it. I just generally don't like short-term investing that much. But my main point is that investing really is like what it's for and what you want it to be, right? I think for both me and you, investing is a lot more of like I'm putting this money that I have no use for right now, some money that I have saved, into kind of safe long-term stuff.
Mm-hmm.
It's going to grow however much it grows. I really don't care. My main point is that as long as it's growing and moving and kind of beating inflation, I'm happy with it. I'm happy that it's growing. I don't have to worry about it or touch it or think about it at all, really. Like, I have money. I have like over $1,000 just sitting in some safe assets. I took some out just because of kind of the fluctuation in the markets and kind of my thoughts on where the market's going to go. But I'm not giving financial advice, so don't listen to anything I say. But my main point is that for me, I don't want to look at it. I don't want to worry about it. It's too stressful. It takes too much time out of my day. I don't want to waste all my time just trying to make like $50 on a Bitcoin trade.
Hey,
I'd rather.
$50, bro. That's like
That's a lot of money.
That's a couple Chipotle orders, like 3.
Well, yeah, but like to me, it's just like too much work, too much scary. Like, I don't want to think about it. I'm gonna let that sit there. I'm gonna let it do its thing while I'm focusing more on making money in other areas of life, because realistically, I think a lot of traders that are like really into it make short-term investing look like a job, right? You could be making $50K a month if you just trade a bunch of these options. You know what I mean? It's like, well, yeah, you can. Like, you could potentially make $50,000. But first of all, you need $200,000 in capital, and you need like a whole bunch of crazy amount of luck to make that much money off options, because sorry, it's unpredictable. It really is. It's not easy to do, and it takes years of failing before you actually start to being more successful in it. And most of the time, like big, like hedge funds and companies that have, money under management from other people, a lot of time those companies, first of all, are very well versed in insider trading, because the best way to make money is know what's going to happen before it happens. And they also are working with a huge amount of capital, right? Like, some hedge funds have like over $1 trillion in like funds that they could use, right? If you have
That's pretty gnarly.
if you have $1 trillion, it's pretty easy to make $100,000 in
like
investing.
nothing. Yeah.
Because that's nothing in the grand total of $1 trillion, right? But my point is for us, random schmoes with $1,000
Joe
to our
Schmo.
name, most likely 10% of $1,000 is $100. You could have just gone and worked some shifts at your local job and made that money back. You know what I mean? And there's no risk involved. There's no chance of losing the money that you put in when you actually just go work a job. So my whole kind of point with short term is like, it seems nice. It looks nice. It looks all shiny.
Oh, yeah.
But in the grand scheme of things, most of the time you're not going to be able to make as much money as you would hope to make by doing short-term investing.
Yeah, I wanted to add a little thing here. So recently, I've been kind of checking out NFTs because I'm very curious about what that's like, right? And it's still an investing thing. Don't take my advice on it at all. But I think anyone who's interested in investing should definitely check it out. What's really interesting about my actual research during NFTs has been kind of like my whole mindset towards them, right? The exact same thing happened when I was learning about investing. I was looking at it for the short-term gain without even realizing it, right? See, NFTs, they're not totally established yet, so it doesn't make as much sense to do long-term investing with them, but there's the potential for it, right? But when I first came into looking at actual investing, just like on stocks and stuff like that, I was just so focused on the short-term investing. I was like, I cannot believe that I can make $50K in a month, right? I was so excited about that. And I was getting all caught up in this research and just like, I'm going to do this. I'm going to make it work because like I can do it, right? And same thing happened again when I was looking at NFTs. I was like, dude, this is so exciting. I could totally pull this off, like all that stuff. Then I was thinking to myself, it might make more sense to long-term invest in this because of the actual stability of the growth, or the stability of the actual growth that can happen later from those investments. You know what I'm saying?
Right.
Like, as you're doing this research, you're getting excited and you're letting those emotions flow in, and then you're going to like be super hyped about it. And I mean, that's awesome. That's cool. And it's pushing you in the right direction, but it can also be too much. And then you start looking at all these short-term options, trades, and like all this like quick like money grabs and all of that. And then you're like, what's going on? Why am I not making any money? It's because you got all excited and let your emotions control you, right?
Yeah.
And like one other thing I want to add in there, as you're doing this research, don't let that research like just taper off and then you just kind of stop after a certain point, because you can always be learning. Like, don't don't stop after you feel like, okay, I've learned a pretty solid amount. I'm good now. I'm going to just jump in. Like, yeah, jump in, but still keep learning. You know, that's like one thing I wanted to add in there. 'Cause eventually you'll find that you probably end up circling towards long-term investing. Like it'll most likely happen.
I think most people kind of eventually reach that circle.
Yeah.
You know, they go through the cycle of like excited about investing, and then maybe it tapers off, and they either kind of just like stop looking at it or more go, oh, okay, long term is a lot more. It's easier. And like there's always going to be the people that say like, oh, well, it's easier because it doesn't make as much money. Like obviously the thing that makes more money is going to be harder. And yeah, short-term investing is harder, but it's harder because it takes a lot more risk than long-term does. Like if you're doing actual proper research with long-term investing and looking into companies and like where you think they're going to be in 5 years, you can still make like a crazy amount of money by putting it into like strong companies that are growing. Like think about even like Tesla, right? Like 5 years ago, Tesla stock was like nothing.
Yep.
And now it's huge. And people who were kind of, you know, looking into the company, what they were about, what their financials were, all of that stuff, they could have, and most of them probably did predict it. Those long-term investors have been doing it for a while, right? So it's like, that's the other side of long-term investing that I think people don't think of. When you think long-term investing, I think a lot of people think, oh, I'm going to put, you know, all this money every month into some random, you know, ETF or whatever and just let it grow 2% per year. It's like, well, I mean, yeah, you can do that, and that's part of it. I think, you know, for me, I have a good substantial amount of money in some like strong S&P 500 ETFs because I believe that, you know, every year they grow like 10%, dude. Like, why would you not put that in? And yeah, sometimes they'll drop a good amount when the market drops, but over time, your growth's going to be really good, right? And to me, it's just like a safe option, no thought involved, and then I can put other money into investments that I'm more interested in, things I'm doing more research on. But it's always good to have kind of that safe foundation with long-term investing. And what's nice is at any time that you're like, I don't have enough time to like go research for 5 hours on, you know, the top growing companies in the US and trying to like figure out these next investments, you know that your money's safe in a long-term investment. Like it's not just going to disappear out of nowhere. You know what I mean? So kind of the excitement and the niceness about long-term investing is that safety compared to short-term investing's potential gain, right? But my kind of whole point with this is when I started, once again, this is the thing that I kept saying, is I looked at short-term investing as a way to make like money, right? And when I say money, I mean like
big bucks.
Yeah, like big bucks, like what a, you know, entrepreneur who just built their first business and it's super successful type of money. Excuse me. And the main point is you could just, instead of taking the risk of having like a 2% chance of actually making like $100,000 in a year from investing, you could just instead look at building a business and starting, you know, business in other ways, building a brand, whatever you want to do, or just going to freaking college and then getting a good job.
Mm-hmm.
Like, I'm sorry, but when it comes to like these short scam kind of things, it rubs me in the wrong way how so many people get like tempted into coming into the world of like short-term investing and like making all this quick money, or like even
they always hear about the big stories. That's what it is. You know?
Yeah.
Like you never really hear about the failures.
You never hear about the
problem.
like for every one person who just made like $1,000 on some random trade, like 50 million, not 50 million, like 50,000.
A lot of people.
A lot of people just lost a bunch of money trying to do the same thing, but they just didn't know how to time it, right? Like it's, and it comes to that saying, time in the market beats timing the market.
Oh yeah.
100%. Because over time, you are going to make more gain through long-term investing. But my whole point is like the whole idea of long-term investing is, you know, having money by when you're like 65, and that's like not that fun. You know what I mean? That's like, well, now I'm 65 and I can't do much with my money anyway.
Yeah.
So my whole point is don't think so much about long-term investing, right? So and it's like the same thing with like NFTs
Mm-hmm.
and crypto. Kids get really excited. Like I got really excited by these ideas of making, you know, 10,000% gain on some investment. You know what I mean? Yeah. Like freaking Dogecoin. Remember that? Everyone was all over Dogecoin.
I told my dad to invest in that, and he wouldn't do it, bro.
and like, yeah, it worked. But see, this is the whole thing, right? Like, people are like, oh, well, it did. Like, Dogecoin popped off if I just invested in it. But my whole point is, when were you going to take your money out? Like, do you know it all? Do you have any idea how to predict when the stock or the value of that asset that you have is going to start to decline, and when its peak is at, and when you're supposed to stop holding? Like, we got a friend. Remember the whole AMC thing?
Oh yeah, dude.
Okay.
Isn't he still holding?
I think he's still holding.
He's still holding, man.
So AMC, like, when was this? Like last year summer, I think.
A year and a half ago, right?
No way. It was last year summer. Yeah, last year summer.
Are you sure?
Absolutely.
Okay, whatever the timeline was. Everyone knows about the GameStop, AMC, all that big stuff.
And then, like, AMC had its whole other thing, like, last year summer, I swear it was. Because it was, like, right around the time we started Thinking Wealthy, because I made some videos on it, like, a month or two in. And then, so, we were doing our thing. We were making videos about it, and I was talking about it. And then my friend's like, yeah, I made, like, he had, like, I don't know, 10 shares in it or something, and made, like, he actually made, like, a decent gain on it. It was, like, something like 40% gain on his shares. And I was like, oh, that's awesome. And at the time, I was like, I don't know. He was like, I just don't know when to, like, take my money out, right? And he's like, I think I'm just going to keep holding. And I was like, low-key, just hold it for, like, a week longer, and if it hasn't gone up, just sell it.
He was following all the Reddit stuff, right?
Yeah.
Like, he kept taking financial advice from Reddit.
Reddit, and people saying, like, there's the whole thing where it's like, hold. And, like, yeah, the idea of holding is, like, smart, I guess. Like, if everyone did hold, then yeah, the value would go up. But not everyone's gonna hold. There's so many smarter people than you. I'm sorry, but, like, most of the time, what's gonna happen is people who are actually efficient in timing the market are gonna beat you out, and then you're gonna lose a bunch of money. So the whole point is like, I think, regardless of what you're doing, the hard part isn't even really finding, like, a company that can blow up and gain value. It's when to take your money out that counts, or when to put it in even, right?
Yeah.
Like, it's just so much to think about, and so much of, like, unknown, unpredictable difficulties, right? And if you want to spend 5 years becoming a pro in technical analysis and starting to learn, like, human psychology and how the graphs relate to when people are going to put in and pull out, you can try. Go for it. There's people who are successful in that, but, like, 9 times out of 10, that's just way too difficult. You know what I mean?
Yeah. No, here's kind of another point I want to drive home. The biggest risk is literally not taking any risk at all, right? This one's by my boy Tony Robbins. This was, like, when I first got into investing. But homie put this out there, and this is really important. It doesn't matter even if you're not, like, if you're thinking about doing day trading and none of what we say, like, sways you, by all means still go for it, because then you're trying, you know? There's so many people out there who get to their 60s who don't even make investments at all, and they're just, like, they barely have any money to fall in retirement, right? Like, even just getting to your 60s and having those long-term investments is a lot better than getting there without making any investments at all. Like, the biggest risk is not taking any risk at all, because that means you have a 0% chance of making any money. Like, 0. That's nothing. You have nothing. Yeah. So go out there and start taking chances. And even if you just want to be an insane day trader, I respect you for that. Like, I'm not saying don't do it. It takes dedication. And, like, doing that, major respect. Go do it. You're taking the risk, which means you still have the chance to make a lot of money, which is better than most of the population, you know? Yeah. And people out there, they're scared. For real. And, like, you made a great point there, because I was kind of just bagging on short-term investing for a bit. But regardless, like, even if you are looking at investing, you're doing better than a majority of other people. You know what I mean? Like, most people don't think about it. They don't worry about it. They're like, oh, yeah, I'm just going to spend all my money on clothes. Like, at least you're not spending it on clothes. Oh, yeah. At least you're trying to, like, be successful and make money with it, and I applaud you for it. But my point is kind of, like, think a bit about, you know, strategies that can keep some of your money safe. Think about kind of, not that you shouldn't go short-term invest, but then if you are going to short-term invest, find, like, the amount of value. Like, let's say you have $100 that you're going to invest. $100 is an easy number, so that's why I'm using it. Let's say you have $100 and you invested in something. Know, like, at what value am I going to stop? And I'm going to pull out and say it's too much risk at that point, right? Like, if you're like, I don't want to lose more than 10% of this, then if the value gets down to $90, pull that out, right? Like, too many people, like, hold, and then they're like, but what happens if it, like, goes up? Who cares? That's what I'm saying. Who cares? That's, like, the emotions, bro. People are letting their emotions get in there, dig around, and, like, just completely screw them up. And it's always going to make you lose more money than you think, right? Like,
there's a chance that, yes, if you keep holding, it drops to 80 and then it goes up to 150. Okay, cool. But at the same time, it's like most of the time, you don't even know when, like once it goes up to 150, do you know if it's going to go higher? Or do you know if it's going to drop? From there, you're like, I don't know. You just have to set those goals of like, I'm going to pull out at this point, right? If you're like, I have $100, if it gets to $90, I'm going to pull out. If it gets to $125, I'm going to pull out, right? $100 to $125, a 25% increase. That's crazy.
Yep.
That's a good investment. What you did there was smart, right? But you have to have those margins. You have to have those things. You're like, I'm not going to lose any more than this. I'm not going to gain any more than this because the risk is too high, right? Just think about that marginal return and like, what's that point where it becomes too risky for you? And what's that point where it's just too much of a risk? We're going to lose too much money. That's the thing that I hate seeing the most, right? Like people who just don't think about the total big picture of the investment and just think about the emotional, like, oh, I can make so much money.
You gotta be a psychopathic Sigma male serial killer when it comes to your emotions.
Yes.
You just can't let them in there because people will let him in there. Shout out to our boy who still might be invested in AMC. He probably, just thinks that there's a chance for it to go back up.
If you're watching this, Kanye, you know what we're talking about.
Not Kanye yay, but like the
Kanye yay.
Not
yay.
But you just gotta cut off those emotions because if you do, you're thinking logically, and thinking with logic always trumps emotions. You know what I'm saying?
Yeah.
So
for real,
be smart about this, and go take some risk because not taking any risk is the biggest risk of all.
It is. And to kind of like sum this up, to finish it off, I just want to make kind of one more point, and it's this. In my opinion, you should look towards investing 100% of the time. Like I think if everyone did just like long-term invest, safe invest, did those things, we'd all have like a lot more money. Like there's some statistic that like by 35, people's net worth is like 10,000. By 35, their net worth is 10,000, and that's counting debt. That's counting the debt against it, right?
Okay.
So their total amount of stuff they have compared to the total amount of debt that they have equals out to like 10,000. Like look that up. I think I read that in the Millionaire Fastlane, that book. So I mean, I'm not sure, but that's a really famous book. So like, I'm gonna take the statistic at heart, but that just makes sense to me. There's so many people, and I'm talking credit card debt, loan debt, all of these things that are pulling down against your total net worth. That's kind of what I'm talking about. And it's because people don't think smart with their money, right?
No, yeah.
And they're like taking on these loans and they're taking all this money that they have because it's in the credit card, and they're making it look like they're rich, and they're making it look like they're, they have all these nice things, but really they just have a bunch of debt, right? So my whole point is this. You don't have to be a billionaire. You don't have to go start some crazy business and make a ton of money and be super successful. You should pursue whatever your purpose is, like we talked in the last episode.
Purpose, baby.
Go do what that is that you want to do. But my point is it's never, ever a bad idea to just put some money in a safe investment and just let it grow, right? Because it's always a safety barrier. I'm always saying to my friends, like, save. You should be saving your money. You shouldn't just be buying everything. Just go save some money. It might not seem really important now because you have like not much to pay for, but in the future, you're going to really value that money that you saved and had in that strong investment, right? So kind of to sum everything up, do what you want to do.
Mm-hmm.
Go invest how you want to invest. We encourage it. We want you to grow. We want you to be successful. We want you to make that money.
Mm-hmm.
And I wish you the best of luck if you're going into short-term investing and want to get more into that. You can make money, but understand and know the risk and think like a Sigma male, like Nick said.
Sigma male, no emotions.
And to everyone, if there's one thing you take away from this video, go look at some long-term investing strategies. I'm telling you, when I started, I wish I started a year ago because I would have made a bunch of money by now. Yeah. For real. Like I would have had a bunch more money if a year ago when I started with investing, I just had put my money into some safe long-term investments right then and there. Yeah. So get into it. Start thinking about it. Mm-hmm. We wish you the best. I think that's really it.
Go be great.
Go be great.
You know you're capable of it. You just got to get there. So
let's go make some money. Let's go do some good things.
Have a great week.
Let's have Monday. A good mindset.
Let's start it off right. Get that breakfast going. I don't know what you're doing. Go enjoy some sunlight.
Yeah.
Go appreciate some people. Go spread some good positivity.
Let's get those good vibes going.
Oh, yeah. You guys have a great rest of your week. Let's pursue some greatness.
And we'll see you guys
in the next episode.
Next week.
Peace.